Hello, future CAs. Every time ICA surprises us in the main exam in a certain subjects where they give us certain surprise questions, this time instead of being surprised in the main exam, let us surprise ICA before itself, where I am going to discuss with you two surprise questions, not one but two surprise questions that they can test in AS28 in the main exam. Let me give the context, and for you to understand this fully, by now or whenever you're going to watch this video, you should have finished studying AS28 fully. Once you finish studying AS28 fully, you will understand this better. In AS28, you know that there is lot of theory, but for every theoretical concept, do we have corresponding questions? No. We only have a very limited questions in our CA inter study material, roughly about 10 to 12 questions. And the best part for those who already wrote the exams, these questions have already been tested in the past. Few of these questions. But have all the conceptual areas been tested in the exam yet? No. So for which they have to frame a few questions, and those questions only I'm going to discuss with you guys. Now if you look closely, if you go to your CA Inter ICA study material, most of you will be studying only illustrations and test your knowledge question. But in the inter study mat itself, there is one example question in the book. I don't know how many of you saw it, guys. In that example question, they discuss for a CGU, how do you account for a top down and bottom up approach for corporate assets and goodwill? How do you allocate by testing and applying top down and bottom up? This every faculty would have taught you the theory in inter level, but in the same concept, study mat itself has an example question. I am going to discuss that question for you, because who knows, what if ICA gives the example question instead of illustration in the main exam? Easily 5 or 7 marks worth question. Same way, there is one more concept called reversal of loss in AS28. Reversal of loss for normal asset, we have questions in study mat, but reversal of loss for CGU, we have theory in the syllabus, but no question is there in the study mat. Now, if you remember a few attempts back, few attempts back, for CA Inter FM, from final, they copied and borrowed one question and asked in the inter paper and did not even give grace marks for students. How much ever angry you all can be, question came in the 3 hours were you able to solve it. So from our CA final ICA study mat, I am taking illustration number 10, which is a very much question which can be tested in your CA Inter itself. I will prove it to you in this discussion, because all the 10 to 12 questions in AS28 have been borrowed from CA final book, which is already tested in CA Inter. But this one question, illustration 10, reversal of CGU loss, not yet tested in CA Inter, even though I'm taking the question from CA final book, but very much solvable by all of you guys. So I will be discussing both these questions now in the next 30 minutes. 30 minutes I'll be discussing both these questions. For the CA final question, around 10 to 15 minutes, guys, and the CA inter question also around 10 to 15 minutes. I will be taking the lecture which I have already discussed as part of my regular batches. I am trimming and cutting that and adding it as after this video. Again, I'm telling you guys, do not panic. My goal is not to scare you before the exams, but be prepared even for surprise question. Same thing I would have also told in expected question video, that in AS28 I'll give you some surprise questions, and these are two surprise questions. So if you're done with your entire preparation, AS28 you're very strong, sir. If you can lend me another 30 minutes of your time, if you have that much time in your preparation, you don't want to take those chances, then continue watching this video for the next 30 minutes to understand these two questions, guys. Otherwise, sir, I'm yet to study AS28 itself, then no point watching what I'm discussing now. That's about it. Enjoy the two questions. If you understood, let me know in the comments. If you have not understood also, let me know in the comments, so I can work on what kind of lectures I can give you. Thank you. All the best. Keep studying, guys. Now coming to the last part of the standard, guys. I would have taught you theory of allocation of goodwill and corporate assets, sir. Theory, definitely you wouldn't have understood. It is more like this part. Without the example, you would have understood? No, you would have not understood, guys. Okay, so now over here, sir, basically what is this concept, sir? This concept says, in CGU, carrying value of asset is given. For that we have to allocate corporate assets and goodwill. If you are able to allocate normally, go and allocate. If you are not able to allocate only, we have two tests. Okay. So the first thing is what? Bottom up test. What is bottom up test? Allocate on reasonable and consistent basis, perform bottom up test. That is meaning of allocation. Let me show that to you. It's not our material, guys. It's ICA study mat has not given illustration. Nobody will look at this, because in all the materials in the market which is there, what they will do, they will copy paste illustrations, they will copy paste RTP, MTP questions, but not the example. So this is a proper sum given in your inter study mat example. So I am going to discuss the example for you to understand. Okay. First we are doing the first method, which is nothing but perform bottom up test. What is bottom up test? I am able to allocate to CGU, allocating everything. Look at the question. At the end of 2020, enterprise M acquired 100% of enterprise Z for 3,000 lakhs. Z has 3 CGUs A, B and C with net fair value of 1,200 lakhs, 800 lakhs and 400 lakhs. What is fair value? Recoverable value. Fair value if I sell in the market, respectively, M recognizes goodwill of 600 lakhs, which is nothing but 3,000 lakhs what I paid to purchase the entity, less 2,400 lakhs. So goodwill of whom, guys? Z has a goodwill of how much? 600. Now I have to allocate goodwill to each of the CGUs A, B and C, and then come down. At the end of 2024, A makes a significant loss, not the whole company. A is making significant loss, and A CGU recoverable amount is estimated at 1,350 lakhs. Come down. Question is given. Net carrying amount of ABC 1,300, 1,200, 800. Goodwill 120. Total is 3,420. This is the value on which day? This is the value on end of 2024. End of 2024. This question what they gave is 2020. So in 2020 goodwill was 600. When I purchased, goodwill was 600. In the end, after 4 years, in 2024, what they gave me, goodwill was 120. So 600 became 120, and in 2024 carrying value only is important for me. As of 2024, carrying value is given, guys. Now they're asking you to check for impairment, because when is the loss happening? 2024. 2024 only loss is happening. Look at this. I will again erase the whole thing. When is the loss happening, guys? In 2024, A is making significant loss, and A's recoverable amount is estimated to be 1,350. So I will compare this 1,300 carrying amount for A. So for CGU A, my carrying value is how much, guys? 1,300. My recoverable value given is 1,350. Is there any impairment loss? No impairment loss, because carrying value is 1,300. Recoverable is more. So can I close the sum by saying there is no impairment loss? This is the net carrying amount of individual assets. If I go back to our concept note, I am talking about carrying CGU includes what? Individual assets plus allocable goodwill plus allocable corporate assets. In this question, what they have given, goodwill also is given. So I have to allocate this 120 should be allocated with these three. Then only I should compare 1,350 with 1,350. Are you following, guys? Now how to allocate 120 with all these three? What ratio? I'll give you two options. Either use the ratio 1,300, 1,200 or 800, or use the ratio when I purchased the fair value at the time of purchase. Which one to use? When I'm allocating goodwill, do I use the ratio of fair value at the time of purchase or current carrying value? You will all say current carrying value, but in these 4 years, lot of things could have happened. What is standard saying? Allocate in any reasonable basis. That is NTT's wish. The standard is not saying how to allocate. So either you will allocate using current carrying value, or you can allocate using fair value. Now, what is fair value? Value of that particular CGU. So when I purchased the asset, my goodwill was 600 and the ratio was 1200 is to 800 is to 400, which is nothing but how much? Which is nothing but, if I split 2 is, if you simplify, how much? 1, 2, 3 is to 2 is to 1. But current carrying value, what is the ratio? It has completely changed. 3 is to 2 is to 1 was the ratio that time. But now the value has completely changed. A value has gone up, B value has gone up, and C has. The ratio is not 3 is to 2 is to 1. So which ratio I will use? I can use both. I can use both. But over here, which is more a fair and reasonable ratio? When I purchased, goodwill was 600, and that time 3 is to 2 is to 1 is what I paid. So we are using that purchase price. If fair value is not there, I will use this ratio. So what I am doing, look at this. In the fair value ratio, 1200, 800 and, which is nothing but 3 is to 2 is to 1, correct? Huh? Hello? Okay. They have done as percentage case, 50 is to 30, 3 is to 17, 3 is to 2 is to 1. And net carrying amount, 1300, 1200 and 800. Goodwill is how much? 120, and this 120 is allocated to the carrying value in the ratio of 3 is to 2 is to 1 using prorate. They are using the fair value ratio, guys. Okay. So if I allocate 3 is to 2 is to 1, now goodwill is added up. So my revised CGU after allocating goodwill is 1360, 1240, 820. Are you getting it, guys? Are you all with me? Huh? So now I have CGU. I am able to allocate corporate asset, allocate goodwill. How to allocate? I told you. Allocation of goodwill or corporate assets, for both it's same. First method, allocate on a reasonable and consistent basis. What we used here, fair value ratio, that only is bottom up. From the bottom, goodwill is added. Okay, guys. So now you come back over here. What is my carrying value, guys? 1360. What is my recoverable value? 1350. So my carrying value is not 1300. It is 1360 after adding goodwill. Are you following? So what they are saying, come here. 1360 is my carrying value. My recoverable value is 1350. So my impairment loss is 10. And that entire 10 we studied. Impairment loss will first affect what? CGU. First hit what? Goodwill. Then it will hit the other assets. In what ratio? Proportion ratio. We already saw that, correct, in discussion, guys. I'm not going into that. So this 10 will be allocated. The impairment loss 10 is fully allocated to goodwill. That means this allocation of goodwill, it is no more 60. It's what? How much, guys? 50. Are you understanding? This is bottom up approach, guys. This is here bottom up, not the other meaning of bottoms up. Okay. This is bottom up approach. Okay. Now come down. Scenario B. Cannot be allocated on reasonable and consistent basis. Perform bottom up test and top down test both. Okay. So here, where is that? Yeah. So here scenario B. Goodwill cannot be allocated on reasonable and consistent basis. So what I told you, we will first, what is the logic over there in that? I told you, if that is not possible, see in bottom up, what we did now read the theory. What we did, allocate goodwill or corporate assets and compute impairment of CGU. So I allocated for ABC, compared for A and took the impairment, correct? 10 impairment. In second case, compute impairment for the larger CGU entity as a whole, including goodwill, and write off the loss to unallocated goodwill. So here if I feel, no sir, fair value is not the correct ratio, I can't allocate using fair value. Now what they are saying, first you will apply what, guys? First you will apply bottom up test. For whom? CGU A. That means what? Check for impairment loss without allocating goodwill. So apply the bottom up test and then you apply top down. So now I will apply bottom up test without allocating goodwill. So without allocating goodwill, come here. Without allocating goodwill, what is my carrying value, guys? It's given how much? 1300. If only if I add goodwill, 1360. Yeah. So without allocating bottom up without goodwill, 1300. Recoverable value how much, guys? 1350. So come down to solution. What they have done, I have compared 1300 without goodwill, compared with recoverable 1350, no impairment loss. So the first step is apply bottom up test in accordance with the paragraph, compare this excluding goodwill. In this only impairment is not there. Why am I doing this? Because I am not able to allocate goodwill. Now I will do, see, since the goodwill could not be allocated on reasonable and consistent basis, M also performs top down test. What is top down test? Don't compare A and A, compare whole entity of Z. What is the whole entity's value? 3420. Question. The question, A was 1312,800, add goodwill 820. Now I will compare for impairment loss not at A level, at entity level. What is entity level now? 3420. So I will come down over here and I will check 3420. This only is 3420. Okay. What is carrying amount of the whole entity? They gave it 3000. Hold on. I am comparing 3420. What is 3420? Whole entity including goodwill. How did I get 3420? Here it's given in the question, correct? Now, what is the recoverable value of whole entity? Not given in the question in example. Come down. In scenario B, they are given at the end of 2024. Recoverables amount is estimated to be 3400. Here only they gave. It's an example question. In illustration, they will give it together. So now I will compare 3420 with 3400. Okay. With 3400 I will compare and find out impairment loss how much, guys? 20 is my impairment loss. So impairment loss arising from top down test is 20, but from bottom up test it is 0. So now what they are doing, therefore M will recognize impairment loss of 20 and allocates it fully to goodwill according to paragraph. So which goodwill I will reduce over here? This 120 minus 20, it will become how much? 100. Are you following? So entity level. Now come and read this, see if you're understanding. Compute impairment loss for the larger entity. I'm not telling you what is bottom up, what is top down. For the larger entity, whole entity you will compare and find 20, including goodwill, and write off loss to the unallocated goodwill. In our example, 120 minus 20 becomes 100. Are you following, guys? So what we did for goodwill, same thing is for corporate assets also. Are you understanding? So this example is there in the ICA study mat, so we have discussed it fully, guys. And then they go to corporate assets. In corporate assets, they didn't give any number. There is no numbers to discuss. Okay, are you following? Okay. Ideally, this should be part of the study mat itself, but it's there in book, so we are discussing. Are you all clear, guys? So now impairment beyond the 10 illustrations, we have discussed accounting for individual asset, accounting for CGU. We have also done allocation of goodwill and corporate assets. Clear, guys? All of you clear? Any doubts? Okay. Yes. Scenario B. Where is scenario B? Yeah. First part. Okay. So the question from student over here is, sir, if recoverable amount over here, in carrying amount is 1300, recoverable they gave in the question, where they gave in the question, yeah, 1350. The question from student is, sir, if recoverable amount is 1290, or let me keep a different amount, 1200. Same. Okay. So that time my impairment loss will be how much? 100. So what that time I will do? This 100 is impairment loss that gets set off against the carrying value of asset. I will do 1300 minus 100, revised carrying value 1200. So what is happening in what method is this? Bottom up. Yeah, bottom up. So in bottom up, I was able to find impairment of asset excluding goodwill. Then I will do for goodwill, again same thing, whole entity as such and find how much, guys? 20. So my total impairment loss will be 20 for unallocated goodwill and 100 for the individual asset. Are you following? So that's why if you come to concept, what they are saying, you will perform both bottom up and top down. Bottom up will help me find impairment loss only for the asset. Top down will help you find for what, guys? Whole entity. Okay. Again, see, what we discuss now is very minimal. We have to go in depth. In final, all the questions are based on this. What is there in study mat we have discussed. Enough for exam. Following. Clear? Any other doubts, guys? With this, finally we are done with AS 28. So be clear, sir, for exam. Now I'm panicking, sir. What to do? All this theory is there. 10 illustrations, you be clear. Be clear with the example question. That's it. And we are prepared. If at all something new comes, we are ready. For that, sir, you bring all the 10 final questions. We'll do that also in the class. We don't have time. We are just ready with the concepts. That's it. Thank you, guys. Recording students. We'll move on to the next one. So to explain this part alone again, where is the pen? Yeah. To explain this part again, what Irfan has a doubt, okay, is, sir, if it comes as 100 loss, correct? Impairment loss is 100. Come down to this table. In this example, it was 0. But look at this. In this table, we got 20 as loss. Now carrying amount is 3420. Impairment loss arising from bottom up test here is 0. In our example, it will be 100. Okay. Now carrying amount after the bottom up test, in this example, it's 3420. So 3420 minus 100. How much you are getting? 3320. Okay. Now what will happen to impairment loss from top down test? How much is coming? No, it won't be 20. So 3320 minus 3400. How much you are getting? Oh, no loss is coming. Yeah, carrying value is 3320. Recoverable value is 34. In this test also, then here it will be 0. So here itself we are accounting the loss. First it goes to carrying value. It will not come over here for goodwill. Yeah, we are coming here in the worst case. If the previous method, if you are not able to allocate goodwill for each of the thing, then only we are coming over here. Correct. So if you do in the previous method bottom up, then this is not required itself. Of course, this 100 will be go to asset only, because this is coming at asset level itself. Correct? It's coming at asset level itself. We will not take it to goodwill. Okay. Here in this case, 20 is going to goodwill. Are you following, guys? Understood? Okay. Now have you finally understood? For exam, this question you be aware, guys. That's it. Okay. That's it. Thank you, guys. With this, we are finally done. So one more scenario. Irfan is asking. So for benefit of everybody, he's saying carrying amount is not 1300. Correct? Sorry, carrying amount is 1300. Recoverable amount is 1290. He's saying. Let's take another scenario. So impairment loss here will come as 10. If this comes as 10, I will come here and write impairment loss arising from bottom up test. How much? 10 will come. Therefore, instead of 3420, this becomes 3410. Okay, 3410 is becoming 3400. Therefore, I will have loss of 10. So in this case, what will happen? I'm getting loss in both the bottom up test and top down test. This 10 will go to unallocated goodwill. This 10 will go straight away to the asset of that CGU. Understood? Now are you getting some clarity, guys? Okay, fine. That's it. Again. Yeah. So I hope you understood. See, guys, first I explain what is there in study mat. Then student, we discussed another scenario. If impairment loss was 1200 and now we discuss 1290. So we have discussed variable scenarios if at all it comes. First of all, this question comes itself, we don't know. But if it comes, we have discussed all the other scenarios. With this, we are really done with impairment loss case. Okay. If you want to ask, sir, why you did so many scenarios, remember the name Irfan. But AS28 is fully done. Thank you, guys. Yeah. Illustration 10 in your CA final book talks about this concept which I just told you. So I'm just big question. You can practice also. Okay. We'll quickly run through, guys. Who knows if it comes? But its theory is there in our syllabus. I will not spend more than 5 minutes for this. Okay. Those out of your own interest can go solve it. On 1st April, Venus acquired 100% of Saturn for 4 lakhs. The fair value of the net identifiable assets of Saturn is 3 lakh 20,000 and goodwill was 80. He gave it itself. 3 lakh 20 is the fair value, goodwill is 80. Okay, the government cancelled license to give in few states. Okay, fine. Let me check if this is the answer. This is the question we had to do. Yeah, this is the one. This is the one. Yes. Okay. As a result, Saturn revenue is estimated to be reduced by 30%. The adverse change in marketplace and regulatory conditions is an indicator of impairment. They are just telling proof there is impairment. As a result, Venus Limited has to estimate the recoverable amount of goodwill and net assets on 31st March. Okay. Venus Limited uses straight line depreciation. The useful life of Saturn assets is estimated to be 20 years with no residual value. The independent cash flows can be identified to any individual assets. So the entire operation is treated as he's telling it's CGU, leave it after that. Due to regulatory requirements, not possible to determine the estimated selling price of CGU. Value in use is 2 lakh 12,000. So it's 0 or 2 lakh 12,000, whichever is higher. So my recoverable value is 2 lakh 12,000. So right answer is clear, correct? Suppose by 31st March, government this last paragraph, leave it. This is reversal of loss. First, let's find the loss. What is the carrying value of the asset? I acquired for how much? 4 lakhs. So carrying value is 4 lakhs, but that carrying value has a double split. That 4 lakhs has a double split. 3 lakh 20,000 is assets, 80,000 is goodwill. So you will depreciate only assets. You will not depreciate goodwill. That only they will do here. And depreciate for how many years? Totally 20 years. Now 4 years are 4 or 3 years, whatever is done. Okay, come down. Same thing they have done. Look at this. How many years over? First is on 1st April 2021. This is happening on 31st March 2023. 2 years got over. So I have to look at the solutions that I am running through to save time. I am splitting into goodwill and other assets and total assets. For goodwill, no reduction, but for other assets, I am depreciating 3 lakh 20. Can you see here, guys? Divided by 20 years into 2 years. Reduce depreciation for 2 years. This becomes your new carrying value. Are you following up? These two becomes your new carrying value. So 3 lakh 68,000 is my new carrying value. Compare with my recoverable value of 2 lakh 12,000. What's my loss? 1 lakh 56,000. So 1 lakh 56,000 if it's my loss. 1 lakh if 56,000 if it's my loss. Can you see, guys? First I will adjust loss fully with goodwill. So goodwill becomes 0 and the balance will be adjusted with the other assets. So end of the year, goodwill becomes 0 and the other assets will become 2,88,000 minus 76,000, which is nothing but 2,12,000. Are you following up? With this, we are done with the first 3 paras.
Are you following, guys? Everybody understanding? Next, anybody has doubt? I will tell you why I am doing this sum. Later, let me finish the sum, then I will show you few sums. Okay. Now the last paragraph. So till here, first 3 paragraphs is basically impairment, guys. Okay. Last paragraph. Suppose by 31st March, government reinstates the license. That means what? They are reversing the license, giving the license back. That means the impairment loss should now be reversed. The management expects a favorable change in cash flow. Good. There is an indicator that impairment loss may have to be reversed. Okay, they are giving question itself. Okay, you have to reverse it. Now the recoverable amount of Saturn Limited's net assets is to be re-estimated. Value in use is 3,04,000 and fair value less cost to disposal is 2,90,000. Estimated selling price. In final, they don't use estimated selling price. That's replaced to fair value. So estimated selling price is 2,90,000. So what's my recoverable value? Whichever is higher. So I will take 3 lakh. So go back to our notes. We have to compare recoverable value or carrying value, whichever is lower. That is the maximum limit of recoverable value is already given. How much? We found out 3 lakh. And we have to find carrying value as if impairment never happened. So as if impairment never happened means initially asset was how much? 3,20,000 and again after this how many years over? From 2013 to 2015 another 2 years. So 3,20,000 was my original asset. Now I have to minus depreciation for 4 years, which is nothing but 3,20,000 divided by 20 into 4. How much? 64,000. So you will get 3,20,000 minus 64. How much? 2,56,000. Let me check if that's correct. Come down. You will get. Yeah. Can you see 2,56,000, guys? 2,56,000. Are you understanding, guys? Okay. So now 2,56,000. Okay. Now look at this paragraph. This paragraph is important. The impairment loss recognized. Okay. The impairment loss recognized previously can be reversed only to the extent of lower of the re-estimated recoverable value of 2,50,000 higher of 2,90,000 and this one. That so we can only go up to 2,56,000. Therefore, before doing, so this is my upper limit, correct? But after doing impairment, my asset is how much? 2 lakh. So can I say 2,12,000 is going back to 2,56,000? How much I can reverse, guys? 44,000. Is this correct? No. Why? Because this 2,12,000 is of the year 2013. This 2,56,000 is of the year 2015. So for this you have to provide depreciation for 2 years. That only I told in the example earlier. So for this, if I provide depreciation for 2 years, it will come down. Let me quickly show you. It will come down to 1,88,000. How, sir? Look at this. 2,12,000 minus 2,12,000 divided by 18 into 2, because 2 years already over, divided by 18 into 2. How much? 24,000 if I reduce, then you will get 1,88,000. So this revised value is 1,88,000. Now this 1,88,000 is reversing back to 2,56,000. So I can reverse up to how much? 2,56,000 minus 1,88,000. How much, guys? 68,000. That is the amount of reversal. Are you following, guys? This is a proper application of this concept. Are you following? Sir, why are you doing final sum and it's not in syllabus? Let me show you. Come down. There are 24 illustrations in this book. Leave it. Okay. This sum. Illustration 12 of CA final book. Where did you see it? 1 second. Let me open it for you. You search, try to find before that. Practical question number 10 in our book, correct? So let me show you 356 end of the book. 356 impairment of assets. Practical question number 10 now. Towards the end, correct? We solved this in the class. Where is that? So if you see in your book, additional questions 5, we remember solving this, guys, in our class, in the previous class. This same question which is there in your syllabus came from where? Final. Are you following, guys? So for that reason, not only this sum, some more sums. Okay, quite a few sums came, but you don't waste time. I don't want you to focus on all sums. Just this one sum that we did, be aware, because it's part of syllabus. There is no question in the book. Other questions came from final book. So examiner will tell, okay, let me test this. Are you following? So this question alone, be aware. Is it difficult or easy, guys? Easy. So if it comes as a proper 5-mark question, that's it. With this we will end AS 28 for once and good. Easy or difficult, guys? Hello, medium, easy, difficult, practice, that's about AS 28. But end of the day, be strong with the study mat illustrations. At least study mat illustrations are easy. I told you. After that, other theory only is little extra, but the sums are very easy. That's about it. We will close AS 28. Thank you, guys.